Afternoon, how are we all doing? Afternoon, Ian, Danny, Baggy, Neo, Evans, Julio, Julio, Paolo, Amy. Afternoon, Billionaire Traders. Yeah, very nice, wouldn't it? Afternoon, John, Tom, Marco, Monkey, Virginia, JC, Jerry, Gregors, Brian, Harold, hello. Sadici, Gaming, hello. Right, so we've had some news. Not particularly amazing, not particularly bad. Didn't particularly do anything, really. Sorry, got a back test running there. Not bad, is it? Nice little equity curve. Give you 3 guesses which EA is doing that. Over a year. Good test. So US dollar had a little bit of a drop against the CAD, a little bit of a drop against the Swiss, a little bit of a push against the yen. But yeah, so negative US movement on the news. So we had a positive, but while it is a positive, it is still down on previous. So they were forecasting a drop. We did get a drop. Wasn't quite as bad as a drop as they thought. The core PPI was actually up on forecast, which is weird why we're getting a little bit of a negative move off the US. But overall, it's not actually far out from what was forecast. So I think that's probably why we've got the move as it is. Afternoon, AZ. Afternoon, Fletch. So yeah, so nothing particularly happened off of PPI. We had a little bit of movement, but not a lot. So yeah, just bit of a pop, really. ADRs, we've got a couple today, and there's a couple of RSIs, which these ones we looked at this morning, if you're in the live room this morning. Swiss yen on the 4 hours pushing up even further. So we were extended already. We're pushing up even further. So there's a good chance this might hit ADR today. Loads of resistance coming up. There's take your pick kind of. Market structure is just really nice on the way down. So there's loads of resistance coming up. It's very difficult to pick a turning point for that one. But Swissy's having a bit of a rally. So as you can see, CAD Swiss is coming down. So that one's extended. Happy to sell everything against the yen. US dollar Swiss is extended to the downside. That's still coming down. That's getting down towards the 20 level. So really good area to start buying from. Got an accumulation here that we broke through on the news, which is potentially going to act as a support. That's that propulsion gap on the 4 hour, which is ADR today. So that would be a good little buy down there. Our ADRs, we've got pound New Zealand. So that's hit ADR today to the upside. Not really going anywhere if you look at it overall though. But that is a hit to the upside. And we've got New Zealand dollar Swiss, which is also hit to the downside for ADR. And I'm short on that one already. So nothing much to look at today, really. We've had a bit of movement, but all the movement we're getting at the moment is corrective. So it's just corrective on previous days' moves. Nothing's going anywhere. We're just sideways, but kind of a bit volatile at the minute. DAX this morning, pretty tricky this morning. So we had a little bit of a push the upside from the open. So the open was an absolute whippy mess, but it broke nicely to the upside in the end. We identified that area for resistance this morning. So we were looking at this high and this high as resistance. So far, we're bouncing at that first resistance, which is the weekly high from last week. So hopefully that will come down from there. But couldn't really make any money on the DAX this morning. That's about it, really. Banked some this morning. If you weren't in the live room this morning, I banked 0.94%. I did a load of load of drawdown control on the pound US dollar. So it's a shame. If I hadn't got out of these this morning, that would have been the break even on the position. But it's not a problem because I banked 1%. But So I banked those 2 positions this morning and did 3 complete drawdown controls on previous positions. So overall netted 1%. On the pound US, brought the DD down to 1%. I've got out of today the Euro odd, CAD, New Zealand. Something else I got out of I can't remember what it was. Euro Swiss. So I got out the Euro Swiss. So I got into this one on Monday on the H1 reversal. I was looking for the gap fill. Yeah, so I was looking to fill this gap here. But as I said yesterday, I think it was in the New York session yesterday, I put this to break even. Market's about to open. I don't like the way this bounced off of this area here, this previous support turned resistance. We hit that, immediately rejected it, pushed back down again. So I moved this position to break even yesterday in the anticipation it might come back, and it's not going to do the gap and it's going to push down. So I'm out flat on that. I decided to get out of it. New Zealand's in profit. Might bank that today. That's close to the propulsion. So yeah, 2% drawdown, 10% bank this month. That's where I am. DAX didn't get anywhere, so closed out the hedge for a bit of a loss today. NASDAQ, haven't taken the break on the NASDAQ. The pre-market's too small. Dow taking the pre-market, and US 500 or S&P taking the pre-market as well. So we'll see where we go today with these 3. Afternoon, Peter. Afternoon, Kennelly. How are we all doing? So yeah, that's it really. It's the same as this morning. No news. Nothing much is moving on anything at the minute. It's just really, really flat. So hopefully we get a bit of movement this afternoon. I get the feeling the market's hanging around for FOMC. So this is obviously it's going to be hit and miss. FOMC, when we've got an FOMC meeting and there's no press conference and there's no rate announcement, it tends to be very hit and miss, and we quite often get absolutely no movement on these. Reason being is because all it is a meeting where they discuss obviously forward guidance on the US dollar moving forward. But when it's just the meeting minutes published like this, it tends to be because there's nothing important being said. So it's kind of what we said last time type thing. So that's potentially this evening not going to do any upsetting. We probably get a little bit of a whipsaw, we usually do, but probably not go anywhere unless they say something dramatic. So I think what the market's waiting for is CPI for tomorrow. So tomorrow afternoon is when we're going to get some decent movement. When we get the CPI figures, that's all forecast to drop, which is forecast to be negative for the US. So hence why we've probably had a little bit of US weakness off the back of those positive numbers today, but we'll see where we go. Okay, so long on the NASDAQ. Sorry, I'm not long on the NASDAQ, but if you are long on the NASDAQ, well done. If you took the pre-market 15, that's a nice break. Long on the S&P, long on the Dow. So, upsides today. Ooh, tricky. We're driving straight up into resistance on the Dow. That's not good. So, pre-market high is yesterday's high, which is rejected immediately. We've just pushed up into retesting that as well. So if we don't break that high, we're going to be a little bit stuck today, I think, on that one. S&P, upside potential today. A little bit of wiggle room up to 1R, which is yesterday's high. Other than that, is much more downside today available. Upside, we can go as far as we want. So it might be a tricky one today. We'll see where we go. That back test I was running just as I came on is the stock index hedge EA. So I was just running a back test on that. I've done where are we? I've done a system parameter permutation test on it this morning. Testing, I've done quite a few actually, but specifically testing the take profits and mixed with whether or not to use an aggressive hedge exit or not, and what target to use for a conservative. So basically the test is only using conservative exit or aggressive exit, not using the standard exit criteria, and seeing what the optimal TPs are. So I did this test over 6 months with some other variations in there, and then I extended it to a year basically. So out of the 150 tests run, 141 turned out profitable. So again, as we know, our opening range breakout strategy and this SIH strategy, very robust. But yeah, really good. The only thing I don't like about this, I mean, it's a lovely equity curve, obviously, but the only thing I don't like about it is you are limiting your upside. You're only ever going to get somewhere between a 1R to a 3R return because the TP is maxed out there. So it's a nice steady equity curve, but you are limiting your upside, which isn't a problem. It's good for prop. This would be amazing for prop, as you can see. It's brilliant. I don't know what the drawdown was. Obviously, I've just based this on a 10K account using a 0.2% risk. So it's a very small risk, just under 0.25% risk. So yeah, it's 500 drawdown off a 10K account producing 23% return. So not bad. But I'm going to play around with some different variations on that. I'm trying to get some set files together, but the thing it's a nice problem to have. But the thing I'm struggling with to getting set files together is a little bit like I struggled with the opening range breakout. There are so many versions of the sets that are profitable, like this one here. I've just done this test this morning, as you can see, testing 4 different variables, the main variables. 141 out of 150 pass. So what do you give people? Yeah, they all work. Basically, it doesn't matter. Just pick something at random, press a button, and it'll all be profitable. So I don't want to give the top one. And then again, I don't want to give something in the middle. So, you know, this is why I encourage people to do their own testing. Do it for yourself. They all work. Everything's profitable. It's just there's so many different ways to trade it. I don't know quite what to put up. I put up 50 set files, then people go, well, which one do I pick? I don't know. Pick one at random. So yeah, it's good. Really good. I'm getting fantastic results with it. So are other people. I'm getting loads of people messaging me in Telegram saying, doing some testing on this. It's brilliant. But we will see. Today, obviously, we'll just hedge everything and make a loss all over the place. It does that. So yeah, no real movement this afternoon. NASDAQ have gone long on the 5-minute break. Cool, that's quite a big break today. Just under maximum range. That's just under 20% ADR. Straight into resistance. What a horrible trade. All of these trades this afternoon have gone long straight into resistance. I hate buying into resistance. If it breaks it, it's lovely because it will fly. But if it doesn't break it, it's just going to come down. You've got to deal with a head short. But see where we go. There we go. We've popped through the NASDAQ. Dow's struggling. S&P not gone anywhere either. So NASDAQ looks the strongest at the moment. Oh, something we've got to look at. Where are we? Earnings. So we are coming into earnings fortnight. So we are on the 11th, which is here. There's nothing today. But Friday we kick off this week with the banking sector mainly. So we've got BlackRock, Citi, Morgan, Wells, all sorts of stuff coming out on Friday. And then we go into Tuesday to Friday next week. We start kicking off with some of the big earners. So we got Goldman Sachs, Johnson's, Netflix, Tesla, Procter. There's lots in there. So We are starting to get into high volatility season for the indices. And then the week after that, the last week of October, that's the biggie. So this is where we get the big earnings reports every day. So masses of volatility coming over the next 2 weeks. So we should have some really good opening range breakouts over the next couple of weeks where the market just picks up and we get lots of volume coming in at the open because there's lots of stock purchasing going on. So it's going to get busy over the next couple of weeks, which is good. ADR on the Aussie dollar Swiss. Big Swiss franc is on an absolute roll at the moment. Lots and lots of movement on the Swissy. So this morning, we had a few bits of news coming through this morning. Nothing major, bit of talk out of the ECB and stuff. Just get up to where we are now. It's just been some news on oil. Okay, oil's coming down. So the long I've got on oil at the moment, obviously I've got a second buy at the gap fill, which is going to be ADR today. So we are just back down at the lows from the previous day. So this is our weekly low that we're trying to crack here now. So that news, OPEC deal likely to be continued. So that's basically Russia is able to replace lost EU gas market with Asia. So basically the cap staying in place, which should be good for oil prices. Other than that, this morning, news-wise, we've just had the PPI figures, which we've already covered. We had GDP coming out for Germany. The forecasts looking pretty good, as the IMF said yesterday. Apart from that, there was just the ECB talk this morning and nothing particularly exciting apart from rockets flying all over the place. So nothing exciting really on the news today. So the only thing we've got to look forward to this afternoon, we've got Wallace speaking a bit later, but it's FOMC this evening. So nothing exciting. That move, what Putin's just said about oil has just caused a whipsaw at the minute. Okay, NASDAQ's rejected the highs. Dow stuck. S&P stuck. Everything stuck at the minute. DAX stuck. Afternoon, Cron. Afternoon, Hamza. So have you designed this EA to replace the ORB? No, it's just different, Charlie. Different, completely different variation on the break. It's hedging. So it's just a different way to trade, basically. It's not a replacement. It's an alternative. The video's on the website now. So if you go to the website, and it's on YouTube. I'll put a link in Telegram. Didn't post it out on socials, though, actually. I better do that, actually. So this is the video, which explains the strategy in full, basically. So it's on the website now. I'll put a link up there. So it's a variation, basically, on the opening range breakout. So it's all explained in the video, but the problem with the opening range breakout EA, if it is a problem, sometimes it's a problem, sometimes it's not. If you don't get a clean break, so for example, today's a perfect example. Look at it. It's just a whippy mess on the Dow. So if you don't get a clean break, what you can do is get stopped out, then get stopped out again, and then you get back in again, and it goes for a rally. You go long, and then it comes down, and it stops you out. You flip short, and what you end up doing a lot of days with it, which is where you get the stagnation periods, is it just basically whipsaws and wipes out some profit, and then you get a run. You hold the run, which doesn't quite pay for that day, and it ends up making a slight loss on the equity curve. The reason that happens is due to over trading. So you're trying to get it long, doesn't work. So you go short, then you go long, and you go short, then you go long. You're just over trading, basically. The market has got no direction. So what you're doing is you're trying to guess when a breakout's coming. So it can whipsaw you and obviously become quite costly. So the stock index hedge EA, that variation on the strategy, only ever takes one trade a day. It either gets in, hits target, or it gets hedged. If it gets hedged, you wait and you see if the market doesn't move. If it doesn't move, you get out and you exit the hedge with a profit. That's the idea. So it makes you trade once a day. So it stops you over trading, which means that you will get equity curves like that one I just showed you. Yeah. Because there is no over trading. There is no tons and tons and tons of losses because you are going through a complete whipsaw for days on end because the market is just stagnant. It doesn't do that. It hedges you and it locks in losses and then it gets them back. But you still get stagnation. Yeah, you're still going to get periods where it stagnates. All strategies. There is no strategy on the planet that works in all market conditions. This EA is absolutely no different. It will stagnate, but it will also cap losses. This is the advantage of it. It caps your loss. Hedging stops you losing more money. Yeah, so you hear it all the time. Let your winners run, cut your losers short. Yes, in theory that works. Hedging your losers locks in a loss. You can't lose any more than that, but you can win more depending on how big the rally goes. But I mean, this particular one you're looking at is capped upside to 3R. But so it's just a variation, basically. For those that get annoyed with whipsaws, which is probably most of us, isn't it? Dow is hedged by the looks of things. S&P still long. Dow hedged. NASDAQ can't really make its mind up. A lot of volatility at the open today, but not a lot of direction, is there? One of those days today. Yeah. I'm halfway through the SIH video. Super keen to test it out. Halfway through? It's only an hour and 20 minutes. Just watch me on double speed. Only takes half an hour to watch it. I must post that out in socials. I forgot to post it onto Facebook and stuff. I haven't really got a lot to cover this afternoon because the market is quite quiet at the minute. So there's not much point in going through every pair because we've got too much news coming out in the next 24 hours, really. So, I mean, as you can see, for the last week, we're really, really sideways on everything at the moment, which is why we've got no RSIs to look at the minute. We are getting some decent volatile movement like this, but it's just, undoing itself when we get it. So we're just waiting for something to kick in at the minute to give the market a bit of a boost. It's kind of gone into shock mode this week, I think, with what's happened in the Middle East, basically. So the world revolves around oil, and there's a big question mark over what is going to happen with oil over the next, in the foreseeable. So the fact that now Lebanon have got involved with Israel, there's a good chance this is going to spill over into the Saudi area, and that is where we're going to start to see problems with oil production, oil supply, etc., etc. So I think we've got a little bit of worry from the market, which will tend to find us buying the Swiss franc and the yen and dumping the stock market, but doesn't seem to be happening just at the moment. But also we don't seem to be getting any movement. We're getting a lot of just up and down at the minute. So I can look at individual pairs if there's anything specific you want to look at, but as you can see, there's not an awful lot of movement anywhere at the moment. There's volatility intraday, which is good for low time frame scalping, but for just catching moves and holding moves, we're struggling a little bit at the minute. Some stuff's moving, like the US dollar's dropping. We know that. But other than that, not an awful lot, is there? Very, very weak market at the moment. US dollar CAD's coming down again. US dollar Swiss. So this Swiss franc is the main mover today. Which again, as I say, when we have times of trouble, you buy the Swissy. So when we're in a fear mode, that tends to be what happens. Good day all around the world. Good day, Potgator. US dollar yen's gone nowhere today either. So we're now on day 6. So there was your intervention. 1, 2, 3, 4, 5, 6. Sideways. So still in this, still holding it. Had an opportunity to get out of it this morning. I was asleep, unfortunately. It's costing me a lot in swaps to hold this US dollar yen. I just want out of it now. I'm fed up with it. So I've been in it for 6 days. We didn't get the intervention carry. So I've just been paying swaps. So I'm about $300 down in swaps at the moment. So just waiting for an opportunity to get out of this, basically. Hoping that we get some US dollar weakness. It looks at the minute, excuse me, my itchy nose, like we've got a little bit of weakness coming in the yen. Swiss yen's just hit ADR. Everything's pushing up against the yen at the moment, so we've got some weakness coming through on the yen this afternoon. Everything's rallying against the yen. All good buys, sells, all of these yens. Because if this continues to rally up, that's going to happen again. So still looking to short everything against the yen, but I'm in US dollar yen and it's not going anywhere. So S&P, we are still inside bar on the 5-minute range. So there's your 5-minute candle. So we are 15 minutes inside bar now, not going anywhere at all. Dow's re-rallying out the highs. NASDAQ's stuck as well inside that range. We're not going anywhere. We have to wait. See what happens. Right, anybody got anything they want to look at? Any pairs in particular? Because at the minute I'm just holding these indexes and we're just going to have to sit and wait. But I've got nothing else to really look at today. As I said, we're all going sideways. So quick stream today. Has anybody watched the stock index hedge video and does it all make sense? Nobody's commented yet. I did only put it out this morning at about 10 o'clock. So what are we? 3. So it's been out for 5 hours. No one's mentioned anything, which always worries me because it's either really, really clear or everyone's going, what? So didn't need to watch the video. Manual was good enough. Well, there you go, Harold. Excellent. Danny's watched it. Good. But hopefully it made sense. It's a very difficult concept to explain and demonstrate. Trying to get out of things like that. The hedges. So done my best with it. But AZ, almost every position trade I have exited has gone into more profit after I exit. That is what happens. Peter, do I trade exotic pairs? No. Yeah, it will do. If you think about it, AZ, what you've just said is it's obvious that it does that. You don't think about it until it happens, but it's obvious. Yeah. If you take a trade, if you take a position trade, right? What have I just got out of? Pound US. Perfect example. So I just got out of all these pound USs there, and it's gone up further. Yeah. And you probably know what I'm going to say. I say that all the time, don't I? Every time you get into a trade, the chances of it going up or down are 50%. Right? Every time you get into a trade, those are the odds. Every time you get out of a trade, the odds of it going up and down are 50%. Yeah. So half the time when you get out of a trade, it's going to go further. Half the time when you get out of a trade, it's going to go sideways or down. The market never stops moving up or down. It's the 3 constants of trading. The market goes sideways, up and down. That's all it does. There's only 3 things it can do. So by default, when you exit any position, there is a 30% chance it's going up, 30% chance it's going down, a 30% chance it's going sideways, isn't it? So when you get out of trades, it's always going to go against you, or it's always going to run and you're going to go, oh, I wish I'd have held it. That's the problem everybody has. And this is what causes partly everybody to try and find that holy grail strategy that gets the perfect entry and the perfect exit, because you see the perfect entry in hindsight all the time, and you see the perfect exit where it reverses and you go, oh, that was so obvious. Yeah. and you'll see it. Oh, look at that bounce. Right, that high there. We hit that high and it bounced off. I got in long on that triple bottom and I got out there because they hit that high. Absolutely spot on that instance, but I can show you 100 times where it didn't stop at that high and it flew through it. And if you'd have got out there, you would have gone, ah, crap, I lost half my profit. It's a 50-50 shot. Every time you press that button, it's a 50-50 shot of either going in your direction or when you exit, carrying on in your direction, isn't it? Now what you can do, it's just part of life. Forget it. As soon as you've hit the exit button, forget it. What did I get out of this morning? Euro Swiss. Has it gone up or down? I have no idea. Not gone anywhere since I got out. I got out at break even. Not even looking at it. That trade's done. On to the next. Forget about it. I sound like a gangster, don't I? Forget about it. Video was good. Good. It didn't pop up into my subs feed until about an hour ago. What are the settings for that nice equity curve? Oh, bit of volatility just came in on the Euro Swiss there. Hedged on everything. Yeah, absolutely everything. Hedged on everything. Blech, what a day. These are the days, yeah, I'm going to have 4 losses today, potentially somewhere in the region of 8 to 10 grand. Nothing you can do. That equity curve that I just showed you, today, I'm having one of those. But if the market rallies hard today and hits 5R and then pops back up, I'll have one of those. Which am I going to have? Oh, the market. This basically is Harold. This is trying your exit time, 7 o'clock. Yeah, so this is not exiting. This is trading the DAX, but not exiting at just before the market open in New York. It's exiting a few hours into the market. So it's giving the market time to move, make its first move in New York. So again, you know, that equity curve you just seen there, so it's using TP1 is 100%, so it's 1R. TP2 is 2R. And loss recovery is aggressive and 0.2 of whatever you get. So 20% of whatever the TP was at 3R, basically. So that equity curve there, that's what produced that. And it was 2,391 off a 500 drawdown. So I'm just going to rerun that test. At the DAX close, which is the New York Open as far as I'm concerned, and see what we get on the New York Open. See if it's better or worse. This is part of what I was testing, so I might as well do it while I'm here. And obviously this is just one instrument, so need to test it across all the US instruments as well. Nice run on the pound US dollar by the looks of things. Okay. Can't remember how many trades it took, but not as nice, is it? So using tighter stops, you're better off leaving it to run for a longer period by the looks of things. which would kind of make sense because you're going to get more play through the day, aren't you, to get out of those positions because you're getting in tighter, but you're going to take more drawdown on this type of strategy. But I don't know. We'll see. Seems to be pretty good. Big stagnation period, though, there. Yeah, not as profitable. Similar drawdown. So using smaller TPs, you're better off leaving it to run longer. But again, you know, this is what I keep saying. Doesn't matter. They're all profitable. Everything's profitable with it. Very, 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 very few settings you can change that make it not profitable. Take your pick. It's a long-term edge. They all are. All breakout strategies are long-term edges, as are trend strategies. This is going absolutely nowhere today. Total whipsaw look. I kind of like it to break to the downside. So EA's automatically moved TPs to 5R, which is just shy of ADR, basically, to the downside. So if we break the downside, we've got to watch that pre-market level. I don't think that will hold if we do break today. This is more likely where we're going to find the buyers at 3R. Failing that, somewhere around ADR in that propulsion gap is where we're going to find support. So that target to the downside on the S&P looks pretty good. Upside target is ADR, so that's fine on the S&P. The Dow, similar. So yesterday's low, which is just above that previous high from the day before yesterday, on Monday. That looks like a pretty good target. That's a long way from ADR, but that's a pretty good target to the downside. Might adjust that up slightly, ever so slightly, just with inside yesterday's low rather. Upside target is just inside ADR, so that's not a problem. NASDAQ, upside target is way beyond ADR, moving that down to ADR. There's no upside resistance on any of these, so it's kind of guesstimate to the upside, really. Downside, if it does break short, again, same sort of thing. We've got that accumulation, that high, and this level here to look at. So we're either going to bounce out of accumulation and go into kind of a rotation for the day, or if we get through this area of buyers here, which is this propulsion gap, we're going to be dropping down into this propulsion gap. ADR is there. So to the downside on the NASDAQ, I would probably pull up into just inside of ADR. We might get a bounce off that high. We did there. Yeah, so as we broke through, we supported that area. And then the next day we also did. So this is yesterday's low is potentially a good buy point as well, but I'm going to go for the longer run. I'd rather lock in the loss than get out too soon, because if you get out too soon, you can take a much bigger loss. So yeah, we'll see where they go today. Nothing much is moving anywhere on any of them. They're all kind of stuck today. So all absolutely stuck. NASDAQ's trying to make a run for the lows. That's it. Rubbish today, isn't it? Some few Japanese announcements tomorrow morning. Yeah, there's always Japanese announcements, but it's nothing. I don't think there's any. Oh, hello. Nagel's been talking. Pausing could be an option. Not for financial juice, because they've repeated it 5 times. So yeah, pausing might be an option for the euro. Israel forms an emergency cabinet with the opposition. Talks. Okay. Have a quick look at the euro. So euro is rallying a little bit on that news from Nagel. Euro New Zealand, I'm getting very close to target on this now, so I'm just going to lock in a trailer on it. We are at yesterday's high. We've tapped into it. Limit orders have triggered and rejected that level. We're trying to get through it again. If we can't get through that level, we're going to bounce out of that, I think. So I'm just going to put a trailer on it of 100. Oops. Just to lock that in, and I'll get rid of the TP. There we go. So I'm just going to trail that to wherever it gets to. That's target in the propulsion gap where I'm expecting the sellers to step in. That's also going to be ADR. So if we do get up into there, we're going to find some resistance. So Euro New Zealand, I'll be banking that one as well. That will take me over 1% for the day. And hopefully those will wake up at some point. Manual is very clear already, but still watch the video. Yeah. It's always worth doing both, I find. You know, when I read a book, I like to also, if there are videos available, watch a video about the same thing. And I've also found audiobooks pretty good as well. Because when you're reading something, you've got other things going on in your brain. When you're listening to an audiobook, you quite often focus more. So everybody, there's a scientific thing. I used to do training years and years and years and years ago. And when they were teaching us to train, there was all sorts of people. This was in sales training. There was all sorts of people that learned in different ways. And they always taught you to deliver the same information in 3 different formats, 3 different ways, because everybody will consume it in a better way, depending on how their brain is wired. So lots of people can read through a manual and go, got it. Some people read through a manual and go, doesn't make any sense. And they'll see a picture and go, ah. Yeah, and that's where the video kicks in. So if you watch the video and read the manual, it's going to take 2 hours of your life, but you'll have 100% understanding, because whichever way you consume information, you will get it. US dollar ZAR has been quite juicy recently. I'm sure it has, but I don't trade exotics. Is it wise to trade only one pair? No. If you trade one pair, you are limiting yourself to one thing, aren't you? Yeah. So let's say, for example, you are trading only the euro pound, ADR reversals. If the euro pound doesn't hit ADR for 3 weeks, you will never take a trade. Whatever your strategy is, if an instrument that you're trading doesn't set up with the strategy, you'll never get into a trade, will you? So you trade what's moving. At the moment, the Aussie Swiss, the Swiss yen, the pound New Zealand, the New Zealand dollar Swiss are moving. Trade those. Don't just trade one thing, because if one thing goes sideways, that one thing can never make you money. Same with this. Yeah, if you look at the indices, yesterday, made money on the DAX, made money on the NASDAQ, didn't trade those two. Yeah. Because these two, the conditions were not right for trading. So if I was just trading the Dow yesterday, I wouldn't have made any money. Yeah. If this one makes money, this one makes money, this one gets hedged, and this one gets hedged, that's a profit for the day, because these two will be working to 2R, which is more than a 1R loss these two are going to take. So we'll have a 4R there and a 2R there, which gives us a plus 2R. If you only trade one of the instruments, and that's the one that makes the loss, you make a loss. If you trade all the instruments, the ones that make you money, make you money. The ones that make you loss, make you loss. And as long as there's more making you money than making you loss, you make money. Can't focus on one instrument, because you don't know what is going to move and when. Which is the problem people have. Yeah. So people trade a strategy. So when you see a lot of these EAs out there that are like Euro US dollar scalper, gold scalper, oil scalper. Brilliant. It's all factored into oil doing something over a period of time. So they build a strategy, they develop it, they back test it, they curve fit it so that it fits all the settings, fit that particular period of time perfectly, so you get a lovely equity curve. They give you that as an EA, and then it goes completely wrong. And you're like, well, why did that go wrong? Well, because you're trading an instrument that over that period of time was doing that with a trend strategy. This year it's been ranging. It won't work. If you'd have traded another instrument that was trending, it would have worked, but you traded oil. Can't do that. You trade what moves. There's no trader in the world that goes and focuses on one thing. Got to have a portfolio. Euro, New Zealand, almost at TP. Yep. Yeah, getting out of that. Afternoon, Dion. Do you think the Japanese will intervene? I don't know. I think they have. But I don't know whether they will again. I'm not sure what's going on. They won't at the moment. There's no need. Yeah. So the whole reason for this intervention is because of the price of the US dollar yen. Yeah. So the Japanese export all their goods to the West in US dollars. Yeah. If the US dollar yen exchange rate gets too high, it becomes impossible for them to trade. So they have to do something about it. Yeah. That's what an intervention move is. It's not for fun. It's because the economics do not allow Japan to have that exchange rate higher than that level. Think about it like your income and your mortgage, or your income and your bills, right? And we're all getting squeezed at the moment because prices are going up. If you earn this amount of money and your bills keep rising, yeah, when you get to the amount of money you've got coming in and your bills being the same, you can't live anymore. When it gets above that level, you actually start having to borrow money from your credit card or your bank to actually just survive. This is what's happening with the US dollar yen. When this gets to this level, it's not economical for the yen to continue to trade. The Japanese cannot continue to trade because if you manufacture everything and export it to the US in US dollars, you buy everything in the yen. If the US dollar yen rate gets to a point where you're buying stuff in yen and selling it to people in US dollars, and what they're paying you is less than what you're paying to buy in your products, your raw materials to manufacture stuff, there's no point in manufacturing stuff anymore. So you have to have some kind of trigger that stops that happening. And that's what these intervention moves are. So yes, they will intervene again if it goes up. But at the moment, there's no need because it hasn't gone up after the last intervention. It's gone sideways. So they're like, that's fine. Don't do that anymore. We want you to do that, but as long as you don't do that, we're okay. So this is the trigger. This is your reason for it to happen. If that reason doesn't happen, it won't happen. But at any point, if they're getting worried, they will. It's volatility. So this is the first time this time round with intervention moves. This is the first time the Japanese have said we're interested in volatility, not price. Because before they said 145, if you go above that, we're going to kick you. They did. Then it pushed up again. They said, right, you've gone further than 145. If you get to 150, we're going to kick you. And they did. This time they said, we're not happy about the speed of these movements that are pushing against us. They never mentioned a price, but it just happened to be exactly the same price as last time they warned us about, which is 150. So you have to read into this that 150 is the level they do not want it above. Last time they took it to 152. That's because they had to wait for the intervention move to happen. And they did. So it's just one of those things. You don't know when it's going to happen or if it's going to happen. But if you were in the live room last week when it happened, yeah, I said, this looks like a move that could trigger an intervention. And literally an hour later, everyone was shouting at me about it, going, hey, it's happened. Yeah, but you won't know. You'll hear about it before you see it, because this will happen so quick. This entire move here happened in less than 2 minutes. 400% of its normal average daily range, 2 minutes. You haven't got time to react. You're either in it or you've missed it. But what tends to come after it is a continuation move, which lasts for weeks and months, because you can't go above it. So if you want to make money, you need to come on the opposite side of it. But when it'll happen again, we don't know. God, this thing's up and down. Look at this today. I mean, my P&L is up and down really all the time. This market is all over the place today. Again, hopefully it breaks to the downside. We've got a lot more room to the downside and a lot easier exits to the downside than we have to the upside today. So I'm hoping they'll just push this down and we can get some nice exits later on in the day and nice reversals towards the end of the day. So it's a long way to go, though. I'm not convinced ahead of FOMC. I get the feeling we might be sitting around today. One of those days where you can look at it later and you're going to go, what was I doing trading today? Hindsight, what a beautiful thing. Yeah. Right, that's all I've got for you. Palestinian leader Abbas is to visit the Russians relatively soon. So, plan for... I'm out of the Euro New Zealand. There we go. So, out of that one. So, 1.18 banked today. That's 9.86 on the month so far. Today, basically, this is what I've got on the exposure. So I'm basically going to be watching for, obviously, US dollar movement over FOMC. There's nothing I can get out of at the moment. So the US dollar yen, I'm in short. The pound US dollar, I'm in long at the moment. So I'm obviously hoping for US dollar negative moves today off the back of the news. There's nothing in profit that I can bank, but if you've got anything in profit on the US dollar at the moment, or you've got anything in profit just ahead of FOMC, get it in the bank, because if you look at the pound US dollar, for example, yeah, if you're long on this and you're in from here or something, and this thing collapses basically because the US dollar rallies hard, you're not going to be able to get that profit back. Yeah. So there's no point in putting a break even on it and going, oh, well, I won't lose any money. Take the money, put it over here. You can spend it. You can't spend a break even. You can spend some money. Yeah. If it rallies, brilliant. But you are taking a chance of either making a bit more money or making nothing at all. Yeah. So always better to bank it, get it over here in your P&L, make it green, and then you can't lose it. So that's all the exposure that I've got on at the moment. There's nothing in drawdown particularly worrying me. The pound US dollar is obviously the only thing at the moment that's got a problem. It has got one position in profit, which is fine. So if it does pull down today, I should be adding back in. So I haven't got anything I can bank or worry about today. So it's literally just a case of being a passenger and watching what happens with the US dollar at FOMC. I don't think we're going to get anything shocking out of that. I think tomorrow is where we're going to find out some information. But what we might have in here is a little bit of guidance, which is if inflation is stubborn, yeah, we will be hiking. Yeah. So what they might give in here is some guidance as to what they will plan to do if this happens. So that will give the market a clue as to whether or not to hike or drop on inflation figures. So this inflation figure is forecast to come down year on year. Month on month, it's forecast to come down. If it does what it's forecast to do, the US dollar will drop. If it's not forecast, if it doesn't do what it's forecast to do, the US dollar will either go sideways because the market will still go, so what are you going to do about it? Or it will pop. It depends what these numbers come out as. If they give us guidance in there that they're going to increase interest rates, if inflation does not come down this time round, that will pop tomorrow. Yeah, so this is a key figure tomorrow. This is what it looks like the market is hanging around for at the moment. I doubt it's going to be FOMC. I'm more likely going to be the CPI figures tomorrow because inflation is the key driver at the moment. So we'll see what happens, but that's all you got to worry about. We've got Wallace speaking now. So there might be a little bit of fluctuation coming on the US dollar this afternoon while he's talking, but that's it. So nothing much else to look at today. JC, if the SIH backtest is run with hedge recovery both set to false, and then all losses are going to be 1R. No. You haven't watched the video, JC, have you? Or it wasn't as clear as I thought it was. So if the loss recovery is set to false, and false, what the EA will do is if you get hedged, yeah, So you got a 2-hour target and a 5-hour target, 2-hour target and a 5-hour target. If that is set to false, what will happen is if you get hedged, yeah, those targets go bye-bye. And we set both targets to TP2. In this case, it'll be 5. And then what it will do is it will get out at the end of the session. Yeah, so what it will do is it will, if it hits the 5R, it will go, thank you very much. That one is still in play. And what I'll do is I'll just carry on and I'll close at end of session, wherever you said. Yeah. So what the EA will do, if a hedge target is achieved, it will get out of the opposite side of the hedge at the time you tell it to. So before if you're trading the DAX, for example, before the New York session or at the end of the day, or whenever you say, basically, it will get out at whatever it's at. So let's say, for example, you hedge, you got a 5R target and a 5R target. If it hits that 5R target, it will bank it. And then if it comes all the way down to here, by the time it gets to the end of the session, it will bank that beautiful profit as well. And you'll make a fortune, right? If you set this to true, wherever it's gone, the conservative hedge exit to true, what it will do is it will try and get that much of your losses back. So if you get hedged, you've got your 5R target. Yeah, what it will do, let's say it hits that target and that banks you $5,000. Okay. When it pulls back, what it will do is it will try to get 20% of that for you and close it out in profit. So as price pulls back down, when you get to the same distance from that exit on your longs, yeah, away from that target up there. So when that distance there equals that distance there, when price is pulled back, you will have a 0 break even on your P&L. If it pushes down a little bit more and it achieves 20% of whatever you banked, it will close that out. Yep. So in this case, on $5,000, it would be 1,000. So when it gets to $1,000 in profit overall, i.e., banked 5, and now I've only got $4,000 in drawdown, I will close out at $4,000 in drawdown on that. $5,000 minus $4,000 equals $1,000. Thank you very much. Yeah. If you use the aggressive exit, it will do exactly the same thing. Yeah. So we got our 5R target, a 5R target. We go long, go short. We get hedged. It pushes up to the 5R target. The difference is it will bank that 5,000. With the aggressive exit, though, it will place a pending short order there. So what it will do is if price pushes away from you, it will drag that pending order until the sellers come on board. And as soon as the sellers enter, it will trigger your shorts, and you now have shorts there and shorts there, meaning you've got twice as much shorts on, which means you haven't got to get as far down to get that target. Yeah. So it's a faster exit. So we haven't got to rely just on a natural pullback. We are relying on that natural pullback plus the profit we make on these positions, which means you have got to move half as much distance on a pullback. Faster exit, aggressive. Yeah. There are 3 different ways to get out. All of them work. One's aggressive for people with big balls. One's conservative for people with smaller balls. And one is for people that just go, oh, well, we'll just let the world be. It'll either make me money or it won't. They all work. Yeah, you choose. Those are the 3 ways. That's probably a better explanation than I did in the video thinking about it. But anyway, that's how it works. So pick one. The difference is remarkable. Yeah, that one there is with aggressive, so conservative, aggressive exit, basically. So if you take the aggressive off and you take the conservative off, right, the result was $1,300 with 490. You run that again without using any kind of conservative or aggressive exit, you get a very different result. First of all, what you're not doing is limiting your upside, because you can now make, every time you hedge, you can now make money on the hedge long, and you can make a big profit on the hedge short as well. If you have a day that goes like this, yeah, you get let's say your range is there. You make all the money there and you make all the money there. Whereas on the conservative and aggressive exits, you only make that much. Whereas you can make that much, which is why you'll see bigger rally spikes, because its upside is now unlimited, because you can hit a 5R target to the upside and it could drop to a 5R target to the downside all within a session, 10R. So now instead of having a 3R upside cap, you've got a 10R upside cap. Big difference. There's not many days it does that. So what you're talking about is an ADR to ADR day. You're talking about 200 ADR day, which they don't happen very often. But when they do, you make a lot more money. Also, the days where you get those hideous 200% ADR moves in one direction, you are going to make less loss if you're not using an aggressive exit. Aggressive exit can produce more loss and will produce more loss on a high trend day, which is why on those back tests, you'll see a few big spikes like this, like that, like that. Those are big, strong trend days, which are over ADR, because you're getting out of one hedge up here and going, thank you very much for the $5,000. And then it's pushing further against you and going, sorry about your $5,000. I'm taking a $10,000 loss on that because I've pushed twice as far as when you got out. That's what these big drops are. But overall, see what I mean? It doesn't matter which exit you use, how you get in, how you get out. It's always going to make money just because the market moves up and down. It's just some people prefer bigger wins. Some people prefer nicer equity curves. If you're trading prop, the equity curve route is probably your best. It's going to take you longer to pass, but more reliable. If you're looking to get quick money out of prop, having an equity curve where you can have a 10+ day is probably better. So there's all sorts of ways to do it. There's no right and wrong. As I say in the video, there's never a right or wrong in any type of trading. Trading's trading. You can get in and get out on the flip of a coin and still make money. What tick data are you using? Yeah, Ducascopy. I'm getting nowhere near what you are getting, backtest wise. Yes, you are. You sent me your backtest. Hang on a minute. Harold, you sent me your backtest. This is your backtest you sent me. How can you say you're not getting what I'm getting? You sent that to me. That's your backtest. It's a variation on your backtest, but it's pretty similar. This spreadsheet I just showed you, this is all the system parameter permutations on the backtest that you sent, which is 141 out of 150 passes. So it's good. It's all good. This isn't good today, but day's not over. See, and this is the thing. So let's take the Dow, the S&P rather, as an example now. So where we are now, it's either going to do that and flip flop and go meh, nothing you can do. If it goes right, let's get ready for FOMC, get out, happy days. That's going to turn into $500, $1,000, whatever it's going to turn into, isn't it? But you've got to let the market play out. If the market wants to do this, you're not going to make any money. Neither is anybody else, because the one thing you need in this job is movement. If you don't have movement, you don't make money. So on rotation day, and this is the whole point of the stock index hedge EA, on rotation days, the maximum I can lose there is $1,800. I cannot lose more than $1,800 if this stays in rotation. So I'm going losing day today. Oh well. I'm not going losing trade, losing trade, losing trade, losing trade, losing trade, losing trade. Why is this not going anywhere? How have I lost 8%? Why have I lost 10%? Why have I blown my prop account? I've just lost $1,800. That's the beauty of this hedge variation, is you don't have hideous, massive losing days like you do with the ORB EA, or you can with the ORB EA if you don't stop trading. If you don't identify you're in a nasty, nasty day of rotation, you get burnt, don't you, sometimes? So I'm rerunning it. Maybe something wrong with my terminal. Maybe. Just make sure your data's correct. So when you're doing back tests, if you run a back test, so get your broker chart for the last week or whatever. So, just zoom out, look at your broker chart for the last week. Run a visual back test with the data from whoever you're using for data. Yep. Scroll out and just go, does it look the same? Yeah. Are the open times the same on my chart? Are the open times the same with the test data? Is the test data highs and lows the same? Yes. Yeah. So just verify, what you're actually physically going to be trading on with your broker. When you do a back test, is the data, it's never going to be 100%, but is it pretty much? Yeah. Are the opening times right? So if on my broker, 10 a.m. broker time is when the DAX opens. If on the Dukascopy, it all goes nuts at 9 a.m., you see the volume spike at 9 a.m., there's no point in testing with 10 a.m., is there? Because it's 9 a.m. So you need to adjust that data forward. UTC +2. And that's all done in the tick data settings. You set the tick data settings, you set your GMT offset and the DST you're using. So you just make sure that that chart looks like that chart. If they look the same, your back test is what you would have got pretty much. If that looks different, not going to work in the real world, is it? Doesn't matter how good you make this, that wouldn't have ever happened to you. But mind you, anything you do on here is never going to happen to you in the future anyway, because none of this price action is ever going to repeat itself. All you're doing is you're seeing what sort of risk rewards should I go for? What sort of ranges should I be playing with? How's best to get in and out? What is it good to use, a small trailer or a big trailer? You can only answer these questions, which is where system parameter permutation testing comes in. That's the whole purpose of system parameter permutation testing, is you cannot pick one of these because none of these are ever going to happen again. I will never, if I use that set file there, I will never get the same result as that set file produced in the past, because the conditions on every single day that I tested are never going to repeat themselves in the same order at the same sizes. It's just not going to happen. But if you can run a parameter test saying, should I use a TP of 1R, 2R, 3R, or 4R? Shall I use a loss recovery of 2, 3, 4, 5, or 6? Should I use an aggressive hedge exit, yes or no? And test every single permutation of all of those jumbled up together, and they all come out as passing, you know that it doesn't matter. So it just works, doesn't it? So if everything I tried in the past worked, some of that is got to work in the future. You have, this is where the bell curve comes in. These here on this spreadsheet are outliers. There. These down here, so those are the outliers at the top. These down here are outliers down here. So this is a loss. This is a profit. As long as 60% of these results are in this area, it's highly likely they will be produced in the future. That's what parameter permutation testing is about. So if you take 150 of those results, it's 141 past actually, so times 60%. 84. So if you get down by about, what's that, 80, 100, so go about 30 down from the top, which is about there, and go 30 from the bottom, so 141, so about 110. Yeah, there. Anything you pick in there, there's a very, very high probability of the same kind of result happening again in the future. Yeah. If you pick that, the chances are, because it was on the edge of that bell curve, it's an outlier. It's 1 in 141 shot. The one at the bottom is a 1 in 141 shot. If you take an average of all of those results and ignore 20% either side of it, that 60% in the middle is what you're after. Which is why whenever I run a permutation test, I have to get a minimum of 60% of the runs in profit. This strategy gives me 75% upwards on every permutation test I've ever run. Hugely robust, which is why, I just keep changing settings and it just keeps producing profit curves. Great. But the key is data. If this is crap, garbage in, garbage out. Yeah. If you put crap data in and you test on crap data, it's absolutely worthless in the real world, isn't it? So you've got to make sure your data is accurate. Rule number 1, back testing. You're working on crap data, it's just wasting your time. You've got to check that. Very important. This isn't moving anywhere. I'm bored. So I'm going to leave it there. So I'm just going to let these run out. It's either going to be lost day today or we are actually going to get some movement. But right now it's looking like nothing's happening. So I'll be watching what happens at FOMC. I will make a judgment call later on before FOMC and see where these are. If they're all pretty much where they are at the moment, I might let them run over FOMC because we might get a spike down to 5R, which I can get out of X positions on. If we're down close to 5R, I might just close them out because if that spikes another 5R in the wrong direction, these are going to go into big drawdown, aren't they? So nothing you can do with it today. It's just one of them days, unfortunately. And everything else, as I say, is just flip-flopping, so waiting. All right, so I'll be back tomorrow morning, 7:50, same time for the Frankfurt session, back for the US session tomorrow afternoon. Oil is dropping, is it? Oh, yes. Early US intel shows the Iran leaders were surprised by the Hamas attack. US intel? What did you do? Phone them up and go, hello, is that Iran? Yeah. Okay. Were you surprised by the attack? Yes. Breaking news. Not quite sure why that's breaking news, but anyway. Long-term rates are market determined. Again, what I was saying earlier, we'll have a look at the CPI figures and we'll decide. Nothing new there. So, yeah, oil just about to get into second entry on oil here. So my buy limit is above the high of that day. So looking basically for a bounce out the gap. The gap feels a little bit lower down. So we might get sort of 125 ADR or so. So there you go, triggered. So you saw the average drop down, ADR hit. So yeah, averaged in, looking for a bounce on that. See if we can get any higher movement now. So if this thing scales up, obviously the only thing that's going to happen to oil is it's going to go up. If we get restrictions on supply and demand remains as is, which it will do. So happy with that. That's the gap fill play that we were hoping for. So if you took that short, well done. I'd be looking to get out if you did. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. Other than that, back tomorrow, same times as usual. And hopefully we get a bit of movement. And I'll be watching FOMC and I'll comment in Telegram if there's anything exciting. But other than that, I will see you guys tomorrow. Have a good evening.